Welcome back. Australia's economy grew 2.6% at an annual rate during the December quarter. That's the strongest growth in almost 3 years. GDP lifted 0.8% in the quarter, with the ABS saying public and private demand both contributed 0.3 percentage points to economic growth. GDP per capita, which is a measure of living standards, increased 0.9%, but GDP per hours worked, a measure of productivity, it was flat in the quarter, but did rise 1% over the course of calendar year 2025. Treasurer Jim Chalmers was very happy to talk up the numbers today.
Stronger, broader, more private sector-led growth is a very good thing. Low unemployment, as we have in Australia, is a very good thing. And these are very robust foundations from which to confront the quite intense global economic uncertainty that we face. We faced it before developments on the weekend, but particularly now that hostilities have been dialed up and that this is essentially a conflict which is involving all or most of the region. And so the economic consequences are uncertain, but they are likely to be very substantial.
Total government spending, it increased in the December quarter to about $198 billion, which gave Shadow Treasurer Tim Wilson an opening in Parliament.
The problem is the Treasurer keeps pouring debt petrol on the inflation fire, and he's been fuelling it for 4 years.
All right, let's bring in here Warren Hogan, the Managing Director at EQ Economics. Warren, good to see you. Economic growth stronger than expected. Were you a little bit surprised with the number being that strong today?
Well, yeah, g'day, Ed. No, not at all. In fact, I thought it might be a bit higher. And what we've got is an economy that's really reflecting the numbers we've been getting for about 6 months. That is, we're getting this private sector recovery, and that came through, which was great. We got some revisions to history, as we always do. So that annual rate of growth of 2.6 is the key. It's much higher than anyone thought. I thought we would get a number like that. But it's higher than the RBA's speed limit for this economy, which is 2%. And I think we know what happens when you drive faster than the speed limit. Apart from a fine or an accident, you're probably going to get a rate hike because we're seeing the inflation come through as well. So, yeah, it's pretty much on expectations for me. And, of course, the market's come around to that view in recent months as well.
Yeah, the recent statement of monetary policy, the RBA was expecting growth of 2.3% last year. It's obviously come in, as you say, speed limited higher at 2.6. So how worried are they going to be about this higher than expected number?
Yeah, well, you know, how worried are they about anything? I mean, they don't really do much. Though this number on top of what's happening with oil, on top of the fact that inflation's now getting away from them and rising above their target, means they've got to move. So they've got to go in 2 weeks. I think politically it works because our government can blame international events. That's something they seem to like to do. And of course, it does address the fact that they just can't get away from the reality. Today is the last piece of information that says not only did the RBA completely misread the economy when they last cut rates in August, but of course, the economy is now sort of really quite healthy and running away from them. And at the key of this, at the centre of this, the key to this is the private sector recoveries come through, which is what we all wanted and the government and everyone wanted, but the governments of Australia are not pulling back. And with a very low speed limit compared to the past, 2% growth, we're getting inflation. So we need those governments in their budgets this year to start pulling back, or else the RBA is going to have to do a lot over the course of the next year or two, because this economy is in recovery now.
Yeah, we saw government spending actually accelerate in that December quarter. I know these are backwards looking figures and we've already got the inflation number for the December quarter. It was 3.8% at an annual rate, but I guess the trend could be that spending from the government could actually be increasing right now in the March quarter as well.
Well, that's what the revisions happened, and it's quite profound. The government spending's weakest point was a year ago, and it's picking up in the second half of the year. So, you know, their budgets all told us that they're going to be spending quite a lot this year. The fact that the national accounts weren't picking that up was quite unusual. The governments have to pull back. The best way for us to get inflation under control and get the economy on an even keel is a bit of monetary tightening and a bit of fiscal tightening. The RBA has got all the information they need to get the cash rate back to where it was. And the best hope we've got of limiting rate hikes to about another 2 is if the governments pull back on their spending. If they don't, then I fear that the RBA is going to be going up a lot more and above 5% over the course of the next year or so, because this is real. And this oil price shock is going to take inflation to 5% if it's sustained for the next month or so. So we're really in there's no hiding from the fact that we've got an inflation problem and interest rates are way too low.
Yeah, Governor Bullock yesterday did say that the March board meeting is live. It's in less than 2 weeks. Obviously, we're seeing petrol prices already well above $2 a litre at most servos across Australia. So do you think the RBA Monetary Policy Board will actually raise rates, or are they going to sit on their hands until May, which is what the market's currently pricing in?
No, I just think it all works too well for them. I mean, even if you subscribe to the view that they're very much worried about the political view of this and how to position it, and they're cautious. I mean, the oil price movements we've seen in the last week, on top of what we'd already seen this year, mean that we're going to get more inflation. This data confirms the economy is recovering. Governments of Australia are not pulling back. And of course, would the Treasurer prefer a rate hike a week before his budget in May, which is what the market thinks will happen, or would he prefer one in 2 weeks when he can blame it on Trump? I think it's pretty clear what the mechanics of this is, and I think we're going to get a rate hike in 2 weeks. And hopefully we won't get one in May, but we may need one then as well.
So they may actually follow through with it in March. We'll have to see what happens, Warren. Potentially it could be a split decision, but I'm looking forward to that March board meeting. Thanks for coming on the show today, Warren. Always great to chat to you.
Thanks, Ed.